Hi, this is Jason Trafford from Total Business Solutions, Tax and Accounting Services here in Phoenix, and this is my video blog. Start date October 12th, 2010. Actually, this is a series that I want to do for a number of people that are just asking and wondering about certain things that maybe they're afraid to ask because they seem like they're simple concepts and they just don't get them, and they don't want to be the person to raise their hand and go, hey, I don't get this. And I do this. I do seminars all over, and I do a lot of speaking engagements with new business owners who don't, brilliant business owners who make a great deal of money and don't understand some of these concepts. So for those of you that want to learn some of these things, that's what this is all about. Today I want to talk about self-employment tax. Self-employment tax is essentially just what it says. You're self-employed, and it's a tax you pay for being self-employed. A lot of you anyways. We'll get into the strategies around self-employment tax at a later date. But here I just want to explain the concepts of self-employment tax, where it comes from. And I'm going to try to make it quick, simple, very easy to understand. Self-employment tax is 15.3% on the profits that you earn from your sole proprietorship or LLC. This is the standard, the general rule. Some of you might have corporations. Some of you might have different scenarios and situations. Every single person is a little different. But the standard, the general rule is self-employment tax is a tax based off of profits that you earned through a sole proprietorship or LLC. Now, how you came about earning the money, none of that matters. At the end of the day, you file your taxes at the end of the year, and it's based off of numbers where you happen to be in the plus. Now, if you're in the losses, you can turn this off. You don't even need to worry about this. Or if you plan on making profits, maybe you should just watch it anyways. But for those of you that are doing well enough, this is a problem you want to have. Taxes are a problem you want to have. You're doing well enough for the government to want to cut. So it's not a bad thing for you to be doing that well. It's probably a bad thing that everybody else wants a cut of it, but at this point, that's a different debate. As it sits, self-employment tax is a flat tax of 15.3% on the profits you make from your self-employment. Now, what that 15.3% represents is this. Those of you that get W-2s, regular paychecks from an employer, you have or you currently are, you understand that when you get your check, it is a net check, not based off of all of the money you made, because all of the money you made was reduced by certain things, such as federal income tax. For those of you that live in states that charge income tax, state income tax. I currently live in that, so a paycheck of mine would represent federal income tax, state income tax, also Social Security and Medicare. These are the four most common things you'll see on these. You will see other things, pensions, 403Bs or 401Ks, things like that. We're not talking about any of that right now. What we're talking about is really what we're going to narrow down to is that Social Security and Medicare that you see taken from your paycheck. No matter what you do with how many exemptions you claim on your W-4 when you start a job, it does not reduce your Social Security and Medicare. Here's why. Social Security and Medicare combined is a flat tax rate of 7.65% that you have to withhold from whatever money you make. Now, there are thresholds after you make a great deal of money, but we're not going to get into that right now. We're going to talk basic scenarios. Your basic scenarios, you get a check, 7.65% is held against the gross revenue from that check. The same thing goes for the employer, the person that gave you that check. Also, for every single employee, has to withhold the 7.65% of Social Security and Medicare, which is also called FICA. Social Security and Medicare, that withholding is the same as yours, 7.65 together makes 15.3%. Of course, that number represents self-employment tax number. They're the same thing because self-employment tax is essentially Social Security and Medicare for being the employer and the employee. Because when you go for business for yourself, you're the employer and the employee. You tell yourself what to do, and you do it. Until you start making some money and carrying it on where you can actually hire other people, this is the situation that you find yourself in. So the government has found a way to say, as the government, as the IRS, since we want to stick our sticky fingers in every little purse we can, we're going to find a way to get those people that have left their W-2 jobs, that are no longer withholding in the standard conventional way from their paychecks. We're going to find them, we're going to get them, and we're going to charge them for what we are accustomed to getting as the IRS. The IRS is accustomed to getting the employer and employee side of Social Security and Medicare. So when you go into business for yourself, you're both, so now you're paying both. Before you left your job and started your business, your W-2 was just withholding your side. Now you're going to have to be responsible for both sides. And that's what self-employment tax is. It ends up on your tax return, and your income from self-employment is taxed twice unless you find a way to strategize, and that's where we come into play. That's where us accountants with our fancy ideas and understand our understanding of the system, and we know exactly what's best for you and how to make your dollar the most efficient. But just given the basic rules, say there was no accountants on earth and you had to do this yourself and you relied on the government to give you the form and you filled it out, this is how you would be doing it. Your income would be taxed self-employment tax, which is taking your income from business, pulling it aside, taxing it at 15.3%, sticking it back in your tax return, taking the total of that 15.3% tax and sticking it at the bottom of the return to be calculated later, and then your profitability is added in with any other forms of income you may have in your life, together become your taxable income, which is taxed at whatever tax bracket you qualify in, and then the sum of that is added to the sum of self-employment tax, and essentially all of your income from your business purposes, your sole proprietorship, is taxed twice. So of course, us accountants, we know ways around all of these things to paying more taxes than you should. But in this case, if you let it just ride in the government's hands without seeking any other type of advice and getting around that, self-employment tax is essentially your income tax twice, and really cannot be budged or maneuvered against or manipulated against once it's in that hole. So our job is to keep it out of that hole and try to find a way around it. But I wanted to give you the understanding of self-employment tax because too many people miss this concept. So in review, self-employment tax is 15.3% flat tax. It's an accumulation of both the employer and employee side of the withholdings from Social Security and Medicare, which is also known as FICA. It is also added to your tax return, taxed separately, then added back into your tax return and taxed again. There are ways around this, corporate strategies, partnership strategies, all different types of things around this, but we have to discuss this further depending on who you are. Every situation is different. Sometimes the strategy is not worth it to actually switch from this, but this is essentially the basics of self-employment tax. Again, this is my video blog. I'm Jason Trafford. I'm the President and CEO of Total Business Solutions. You can check out our website at www.totalbusinesssolutionsllc.com. You can email me at jason@totalbusinesssolutionsllc.com, and be happy to go over any cases or answer any questions, and we're always here. So, video blog number 1, self-employment tax, and the next video blog I want to reach into the self-employment expenses, the fun part. So stay tuned. Thank you. Have a great day.